Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q4 H2 and FY26 post-earnings conference call of Virtuoso Optoelectronics Ltd. On the call from the management, we have with us Mr. Sukrit Bharti, Managing Director, and Mr. Sajid Sheikh, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended March 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Good morning, everyone, and thank you very much for sparing your valuable times to join this session. I would request Rajiv to please run through the presentation, please. Can you just move on, Rajiv?
Hello, sir. Yeah, just a minute. Hello, is it audible?
No, Rajiv, it's not visible.
It's not visible yet.
Just a sec. Let me share. Yeah.
Yeah.
Is it?
Yeah, it's visible now. Can we move forward? So to start with, I would like to say that the year that has gone by, 25-26, was a year that defined the resilience that Virtuoso has. I think, despite of the fact that we had a very challenging H1 with multiple factors at play, we still were able to recover the entire year through the last 6 months. And overall, I think the year has gone decently well for us. These are the numbers that are currently displayed on the screen. I think we have closed the year at 823 crores, which is roughly 18% of top line growth vis-a-vis what we did last year. The EBITDA numbers have also improved significantly. If you see the overall absolute numbers from a 60 odd crores of EBITDA, we have moved to about 86 crores EBITDA. The percentage margin also is relatively better, I think decently better. From an 8.6%, it has moved to 10.4%. The PBT levels have remained more or less stagnant because of multiple factors, because this is the first year that we have moved to Ind AS, and the right of use assets have played their role as far as the overall waterfall from EBITDA to the margins are concerned. Profit after tax has also shown a slight improvement from a 1.7, it has moved to 1.8. On an absolute terms, I think from a 12 crore ballpark PAT margin that we had in the last year, we have moved to a 15 crore PAT margin this year. These are the numbers, of course, that I'm talking from the consolidated point of view. Q4, when you see Q4 also, I think Q4 also has a story to tell. Last year, Q4 25 was an excellent Q4 for us, an excellent quarter for us, where we did 240 crores. But this year, we have beaten that number also by a decent margin. From a 240, we have done a 317 odd crores kind of a number in Q4. And I think Q4 of this year has been the mainstay as far as our comeback is concerned. So that's an important number that has come about. Can we move forward? So these are the numbers that we are displaying. The overall from 21 onwards, the CAGR has been 49% as far as revenue is concerned. EBITDA also has moved about 47%. PBT margins in excess of 56%, and PAT numbers also in excess of 50, which is 52%. So that's the kind of growth that we have been able to show over the last 6 years. Can we move forward, please? I'll just spend a little while over here is what we are trying to do now going forward from FY26-27 onwards. The first thing here is that we have been able to set up capacities in all four segments. The four segments that we have, the broad four segments that we classify our business into are EMS and lighting, AC, refrigeration, which includes commercial refrigeration, and compressor, which is a new segment. In all of these segments, we have been able to invest and create capacities. Going forward this year onwards, we intend to increase utilization, try and sweat these assets to the maximum possible. And also, we want to increase capacity going forward here as well. I mean, if I go segment wise, when you talk about LED EMS, I think we are in the process of adding a new facility altogether for EMS, which will be a advanced kind of facility in comparison to what we have now. So that's what we are doing in EMS. In AC, we are looking to, as we move forward in the further slides, there will be more description on that. But AC also, we are trying to increase capacity. So one is the capacity that we have already established. We want to ensure that utilization goes up there. And at the same time, we want to increase capacity. Uh, in line with what we have been doing as a philosophy, I think as a company philosophy over the last 6-7 years, we intend to continue with that in terms of deepening our backward integration, whether it is in EPS, plastics, CFF. We already have EMS capabilities that I just spoke about. We are happy to announce that the new tool room that we have in Nasik has also become operational, and it is currently being scaled so that the turnaround times in terms of our product developments, etc., is faster. We also want to grow on the ability that we have been able to acquire last year. Last year was a significant year for us because of the fact that in the AC segment specifically, we moved from being an OEM to an ODM. This is what has helped us in acquiring additional customers, and going forward also, I think that will help us stand in good. And VOEPL, in addition to this, is also working continuously in trying to develop newer products, options, and add or offer more variety to our customers. Beyond which, we are also looking to grow in the high potential categories. AC, I've already spoken about. Compressor production is something that has really been exciting part for us. I think this is something that I missed in the initial part of it. January, we have started commercial production compressor, and we are, as we speak now, I think it's the 5th, 6th month of production, and we are already running at about 60% capacity utilization. And we are very confident that I think going forward in the next 2 to 3 months, we should be running at about 80% odd kind of a capacity. In the commercial refrigeration bit also, we have added our offerings. We have, in addition to the hard top that we have been manufacturing now, we have added the glass top range also. Can we move forward? So these are the growth levers. We have capacity utilization being one of them. We are talking about the non-AC segment acceleration, refrigeration and compressor. ODM I've already spoken about, and I've also spoken about the backward integration. Can we move forward? These are the capacities. In EMS, from the current 4 lakh CPH, we are moving to 8 lakh in the first phase and 12 lakh in the second phase. AC as a set, we are currently sitting on a capacity of about 1 million, and we look to take it to about 1.8 million by the end of this year. Defreezers, I think we have spoken about it earlier also, that the current capacity is 1.5 lakh units. Plant capacity is 4 lakh units, which will happen in 2 phases. The first phase is where we want to move it to 2.5 lakhs and then 4 lakhs. And in compressors, the current capacity is 2.8 million. We want to take it to 6 million before the end of this financial year. Work towards this has already started. Can we move forward? So these are the growth drivers. We have strong domestic demand in all the segments that we are present in. There is a an active push from the government in terms of localization that is also kind of providing us tailwinds. Uh, when we talk about the compressor segment, I think the announcement from the government where they have uh, given so-called relaxation for the import of compressors, the reciprocating compressors in the segment that we are in, I think 40% is what they have given us, which is a very good signal for us. It directly means that 60% of the requirement of whatever the manufacturing companies have today will have to be sourced locally, which directly opens the gates for us because as of now, we are the only ones who are doing this in the OEM ODM space, reciprocating compressors. Course, we have a strong blue chip customer base. I think all of the segments now have marquee customers, whether it is LED, EMS, AC, deep freezers, as well as compressors. And beyond the central government PLI scheme, we have also uh, Maharashtra electronics policy, which is also helping us scale up and accelerate the growth that the growth plans that we have. This is one I would just like to touch base upon one area here is that till last year it was more of a single product company that we were. I mean, a lot of dependence was there on uh, the AC segment where AC was almost contributing till last year to about 70-75% of our revenues. From there, AC dependence on AC has gone down to about 60% roughly. So the rest of 40% is coming through the other segments that you've spoken about. And this is a very encouraging trend that has come up, uh, a change that is going to help us in the long run, uh, and shifting from OEM, ODM that I've already spoken about. Yeah, I think we can move forward. This is how we are currently placed. Virtuoso Optoelectronics as the listed company, the flagship company. We have two subsidiaries, Virtuoso Compressors Private Limited and Virtuoso Polymers. Polymers has two units, one of them at Sanand and one in Chennai. Compressor is also looking to have a separate manufacturing facility of its own in Nasik. Hopefully, very shortly, the development work on that site is going to start. These are the broad numbers that we talk about in terms of the AC components and EBITDA margins. We can move forward. This is what I spoke about, where air conditioner has gone down from about 75% to 60%. EMS is around 15%. It has been there. Commercial refrigeration 10%. Components is something that has taken up a good amount of space last year, and I think it's rising 7%. Compressor this year is going to be even more than that. I think we had only 3 months of actual production that was available to us in the last year. And within that short period of time, I think compressor was able to contribute a good revenue share. Yeah, we can move forward. I think most of this is anyways. So the revenue scale, yes, as a company, I think we are looking at a 35-40% kind of a CAGR going forward in the next 3 to 5 years that we have been saying, and we continue to stand with that. I think that's one number that we are looking at. OEM, ODM, we have already spoken. Yeah. So that was a
Should we
brief.
move to
And
Q&A?
yeah, Vinay.
Thank you. All those who wish to ask the question may use the option of raise hand. In case unable to do so, you can drop your message in the chat box and we'll invite you to ask the question. We'll take the first question from Dhruv Jain. Dhruv,
Yeah, thanks a lot for the opportunity and congratulations, Sukrit and Sajid, for very good numbers. My first question is on price hikes, right? So what we've seen is that the AC pricing has really moved up given raw material prices, etc. So just wanted to understand, A, what is the kind of price hikes that you have taken? And incrementally, do you expect your margins to remain where they are in this year, at least from an AC perspective, or do you see some pressure there given the raw material pricing? That's my first question.
So I think to answer your question, I would say that whatever pressure came on the margins owing to the fact that there was an increase in the raw materials, The price hikes have been able to kind of cover that. We cannot say at this point in time that there has been any real gain, but the only thing that I can say is that whatever was the pressure on the margins, whatever is that we probably were, kind of losing out there, has been compensated. That's the only thing that has happened as far as the hikes are concerned. Going forward in this year also, we expect the margins to remain where they are, unless, of course, there are any other macroeconomic jolts that we
Sajidji, there is some
have.
disturbance behind you.
No, it's not me. I think there's somebody else.
Okay, continue.
Yeah. So, was I audible when I answered the question?
Yeah.
Just
Yeah.
to
Okay.
add, just to add to that, the reason why, I mean, our margins were already below or lower because we were an OEM and ODM range has recently been introduced. So, of course, we've not been able to probably get the advantage that we should have hoped to get as an ODM. So, margins to that extent are not ideal, but the pressure I think will persist. So I think there are two ways this will end probably. If the rates settle down at a certain price, right now there is uncertainty of the RM rates in the market. Once we know for sure that they're settling at a certain level, then I think the market will also adjust their pricing based on that, and effectively we will also get passed on whatever the balancing rates are. But till the final RM price is derived or the market price is established, our pricing is difficult to completely become immune to the fluctuation. So there has been an impact, but the impact has been sort of mitigated with a combination of multiple reasons. One, of course, addition of customers. Second, old inventory, and third, government support in terms of subsidies, and fourth, because of product diversification. So that has been the story of last year. Let's see how this year goes. Thank you. I hope I answered your question. Exact percentages are difficult, but I hope I broadly answered it.
We'll take the next question from Garvit Goyal. Garvit, you can go ahead. Garvit. Okay. We'll take the next question from Siddharth Jain. Siddharth, you can go ahead.
Yeah, hi, good morning, team, and congratulations, Suprita and Sajid sir. So, firstly, we have one of the slides shows the capacity expansion plans that we have. If you can just give us a timeline of when do we expect these different capacities to come online, that would be helpful.
EMS is expected to be online, I think, in the next 3 months' time. It's already underway. So that's EMS. AC is also an ongoing process. The movement from 1 to 1.8 million, as I said, which would be completed within this FY, hopefully before we enter the next season, AC season. But I think that is also going to happen incrementally. So from 1 to 1.3, probably before the season is definitely on the cards. And again, as I said, within this FY, we need to take it to 1.8 million. Freezers also should happen. The first phase should get completed before the start of the forthcoming season. Compressors, as I said, is a 9 to 10 month journey. So the next phase of expansion from 2.8 million to 6 million should happen, let's say, by March.
What will be the CapEx outlay that will be spending on them? How do we plan to fund it, sir?
Sorry, I just lost you in between.
So, what will be the capex outlay for these capex plans, and how do we plan to fund them?
So compressors we have already tied up. So compressor is 150 odd crores kind of an investment that is going to happen over the next 1 year. That's phase one of the expansion. That is already tied up. And beyond which, I think the rest of it is also tied up. EMS is something that we have already spoken about in the last investor call as well. I think there's a 25 odd crores kind of investment that is happening. That's tied up. AC is something where we'll require funds, but I think we are looking at debt as a primary option there. And as time approaches, we'll see what else is required. But I think for now, whatever is required appears to be tied up. There might be some requirement that might come up in the next 1 or 2, 3 months. We'll just see how it pans out, and depending on that, we'll look at it.
Thank you. We'll take the next question from Raghav Maheshwari. Raghav, you can go ahead.
Hi, am I audible?
Yes, you are, Raghav.
Hi, sir. Good morning and congratulations on a great set of numbers. So, sir, my first question is around the sir, compressor segment. So, as of now, can you tell us the capacity utilization that we are running on?
About 60%.
60%, okay. And sir, for the AC segment, in total, how many customers do we have right now?
We are currently catering to 4.
Currently catering to 4. All right. And are we in talks to finalize some new ones?
Yes, there are, but I think especially during the last 1 or 2 months, our capacity was getting fully utilized. So there was capacity constraint, and hence we were not able to add them this year. But I think going forward, hopefully in the next season, we might have 1 or 2 new names as well.
Right, sir. And so secondly, sir, like we mentioned that our capacity is like compressor is running at 60% and AC, like you said, we have already exhausted the. So for this 35% growth that you said in the initial remarks, where is that? Like, do we have the headroom for that in terms of
Headroom,
capacities?
yes, we do have headroom for capacity. So when I'm saying the capacity, see again, AC is something where we need to understand that during the season, we are talking about the peak capacity utilization.
Understood, sir. And sir, my next question is regarding the mainboard migration, sir. In your last intimation, I think we have got the approval. So can you give us a timeline, like by when can we see this happening completely?
So we have received the in principle from BSE. We are expecting the in principle to come from NSE in the next maybe week or so. Beyond which we are told that there is another 4 to 6 weeks that we require for the actual migration to happen. So listing is the next part of it, which will take 4 to 6 weeks.
So I think by the end of August, is it safe to assume?
Yes, let's hope it doesn't go that long.
Thank you. We'll take the next question from Shreyansh. Shreyansh, you can go ahead.
Hello, am I audible?
Yes, Shreyans, you are on.
Yeah, thank you for the opportunity. So a couple of questions. Despite ongoing energy crisis, commodity inflation, and BE norm change, our margins were better as compared to peers. So could you please throw some light on what are the initiatives being taken by us during such a situation to protect our margins?
See, one is that in the first 9 months, if you see, the margins were mainly, you can say, supported by the fact that we did a lot of components in the first 9 months. I think that was one major factor that helped us keep our margins to that level, because AC in general is a low margin product when you're doing the entire CBU. So we don't really believe that there's something extraordinary that we would have done there. But components as a product mix, what we did was able to help us. Secondly, a little while ago, Sukriti was saying that we moved from an OEM to an ODM. So I think if it did not help us in increasing the margins in general, but I think retaining the margins or protecting the margins was possible primarily because of that reason. I think when you look at the overall numbers and have these two factors on your mind, I think that is what has helped us. Although there has been a slight decline when you see from Q3 to Q4. Again, of course, because of the fact that we did more ACs in Q4. So when you see Q3 and Q4, you'll realize that there's been a slight drop in our margins.
And just to add, the margins definitely are something that we are also fighting for with our customers, and customers have also supported. I think we appreciate that also. To the extent that they can, they have also supported. But one point just to add is product segmentation mix also happened. So that also helped. So it was a combination of multiple things, not one specific thing that sort of came to the rescue. And like we've been discussing for the last couple of years, diversification was something that we were doing so that we are better prepared for such situations. And I think that situation came faster than we had anticipated. But so this is where we are. Hopefully, this will lay the foundation to better results going forward.
Okay, so could you quantify what percentage of revenue from is coming from ODM in REC, sir?
I don't have the exact percentage number, but I believe this year revenue from ODM was between 40 and 50% out of the AC revenue.
Thank you. We'll take the next question from Bala. Bala, you can go ahead.
Yeah, good morning. So my first question is regarding that capex plans. So earlier also we have a target to increase the deep freezer capacity from 150K to 400K, but it's not materialized. So how do you think that whatever outlaid and shown in the presentation of this quarter will get materialized as per the timelines and also mostly in this current financial year?
Sorry, I'll jump in. So last year, because of the overall slowdown in the market, and for us also, it was important to conserve cash. Hence, we did not push on projects which were not absolutely essential. Expansion will continue to be part of strategy, and we will continue to work towards expansion based on demand and, of course, availability of resources. So, plans are definitely plans. I mean, 100% execution of plans is not always in our control. But the idea is that we try to stay as close to the possible roadmap that we give out, is the intention.
Okay, thanks. And on the compressor side, actually, could you please help me to understand what would be the average realization of the compressor? And also, when it comes to margins front, so in previous quarters, we are maintaining 11% margins. So when we are expanding other products also in this current financial year with the compressor and the freezers and EMS, so do you accept the overall margins of the FY27 could be around 12%? Is it possible?
Well, it's a very wishful number. I think we will try and keep it closer to double digits. So between 9 and 10 is what we expect.
Thank you. We'll take the next question from Kaushal Sharma. Kaushal, you can go ahead.
Hello. Yeah, hi sir. Am I audible? Very good morning.
Yeah, good morning. You're audible, sir.
Yeah, so my question is on your capex, like you have said that we are expanding EMS, AC, freezer, and compressor. So, what kind of asset turn are we expecting in this, or what kind of peak utilization level or potential revenue are we expecting from these additions? And sir, you said that in AC we require a capex. So what is the quantum of the capex and what amount of debt we are requiring in this?
So three questions. One is you spoke about the asset turns. For each of them, the asset turns are different. I think EMS asset turns are between 3 and 5, depending on what product we make. Air conditioners, the asset turn is again 4 to 5. Refrigeration is also between 4 and 5 as of now. For compressors, as long as we do not backward integrate, the asset turns are around 4, 3.5, 4. So that's the first question that you had asked. The second question was the peak capacity utilization. So when we are saying peak capacity utilization, if you annualize that, depending on the seasonality, etc., the current set of expansion that we are looking at is good enough to take us beyond 2,500 crores.
2,500
500 crores, yeah.
And so what is the capacity of the
Yeah, so you also, the third part was so AC will require about 40 to 50 crores of investment.
So the entire would be funded from the
That we'll see as we go ahead. Some of the debt we already tied up.
Thank you very much.
Thank you. We'll take the next question from Kunal. Kunal, you can go ahead.
Audible, sir?
Yes, you are.
Okay. First question, if you could quickly review the capex amount for each segment. AC, you have already told 40 to 50, and compressor, so I think 150. If you can tell those numbers about the other
Refrigeration in
segments?
two phases. So refrigeration is in two phases. I think the first phase would require about 20-25 crores. The second phase again will require a similar kind of number. So between 25 and 50 in the two phases that we are talking about as far as compressor is concerned. EMS, I think I spoke already. It's about 25 crores that we need to spend there.
Okay, sir. And about compressors, what percentage of the, have you already started tying up the expanded compressor capacity for FY27?
What we can say is that we have enough interest on this product, which gives us the confidence that the additional capacity will also be booked pretty fast.
And this will come up in 9 to 10 months, right?
Yes.
Okay. What revenue contribution and EBITDA margin do you expect from the compressor business in FY27? And for the margins, what progress do you see from 27 to 28?
So margins, I think we have spoken earlier also. Margins is a two-way story, the two-factor story. So one of them is as long as Chinese imports are allowed and the quantum of Chinese imports that are allowed, that will dictate the margin. So from 100% kind of a situation that we had when we started to a 40% that I spoke about earlier, the margins are going to stay between 6 and 7% this year. And with the complete, hopefully the complete stoppage of import from China, this can move closer to double digits in the next 2 years.
Okay, sir. The other question was about the RAC volumes in FY27, the growth in RAC volumes, if you can give that, and what utilization are you targeting for this year, FY27?
So RAC utilization between 60 to 65% is very healthy in our understanding and experience. So I think that's what we are targeting for. And growth is going to be around 30 to 40% growth.
Thank you. We'll take the next question from Omkar. Omkar, you can go ahead.
Hello.
Omkar?
Am I audible? Hello.
Yes, you are.
Yeah.
Please go ahead.
For the opportunity. First question is currently how much value addition are we doing in compressor? And for next few years, what are our plans in this product? Will we focus more on volumes or on backward integration?
I think we have spoken earlier as well. The idea is to first ramp up capacities. The initial capacity target for us is about 8 million. So from 2.8 to 6 and let's say 8.5 million is what we want to take this capacity to. The value addition as of now is between 5 and 10%. It will remain at the same levels till the time that we are able to hit the capacity target that we have. And once that is there, post that is the phase 2 of our plans, is where we will start increasing the backward integration. The idea is to take it to maybe about 60% in the next 5 years. But that will happen once we have reached the capacity targets.
Okay. What will be the margins on compressors?
I think I have already spoken. This year it should be between 6 and 7, and progress as we have both the scenarios unfolding. One of them is the government restrictions on imports from China, and the second one is of course the backward integration. I think both of them put together, this can exceed double digits as well. So the journey from 6 to 7 will start this year, and in the next 4 to 5 years, we hope that it will probably hit 11-12% kind of a number.
Oh, and question on capital allocation, we are planning to raise around 250 crores via equity and 150 crores via debenture. So,
can you please come a little more clearer? I'm not able to hear you.
Okay.
Omkar, if you can please.
Yes. Question is on capital allocation. We are planning to raise around 250 crores via equity and 150 crores via debenture. So could you please throw some light on what are plans going forward?
That 250 crores is a blanket approval we have taken. I mean, it doesn't mean that we are going to raise 250 crores or the timelines in which we have to raise this 250 crores. That's just a blanket approval we have taken. 150 crores, of course, is there. That is going to come in the subsidiary. And that is the exact amount that is going to be needed in the subsidiary for the first phase of the expansion from 2.8 million to 3 million.
Thank you. We'll take the next question from Abhishek. Abhishek, you can go ahead.
Hi, good morning.
Good morning.
Sir, my first question, I want clarity on in this year, Q4, we see the employee expense are significantly increase. Can can you give me some clarity on that?
You're saying employee expense.
Yes, sir. Yes, sir.
See, we started off very small. And as time has progressed and we have started diversifying, we are trying to create a structure. And obviously, new people are getting hired. The capacities that we are talking about, multi-locations where we have two plants in Chennai, one in Sanand, and multiple locations within Nasik as well. So I think all of that and the structuring where we are trying to bring in the business unit head methodology where we have each of the businesses being headed by a unit head. So all of that plus the teams that are required. So I think the levels or the hierarchy is now getting established, and obviously that is going to add to the cost over there in that column. I think nothing's extraordinary beyond that.
Okay, sir. And second on receivable side.
Yep.
Trade receivable, we can see this year also a significant there is any trouble in cash collection or it's a normal thing?
No, it's a normal thing. I think there's not much. I think the numbers are at par with what one would expect here.
Yes. Okay. And in EMS side, you increase your capacity in two phase. So can you just give me the phase 1 and phase 2 timeline when you are
Phase 1 is
planning?
happening in the next 3 months itself.
Okay.
So I
And
think by end of August, we should be ready with phase 1 expansion.
and by year end?
By the end of this FY, I think phase 2 will also get completed.
Or okay.
Thank you. We'll take the next question from Rupal. Rupal, you can go ahead.
Hi, Sajid. Good morning.
Good morning.
Thanks for the opportunity. I just wanted to have a clear guidance on balance sheet size for the FY27 and 28. Like, since we have got funds tied up, so what kind of debt and equity situation we could see on the balance sheet for the next 2 years?
Debt and equity is what you're trying to look at. I think
Mhm.
I think going forward, the debt is 150 is what is getting added on the subsidiary this year, of course. There will be some equity that gets added so that we balance out this story. Very difficult to predict the exact numbers over there, but I think in the listed company or the holdco, if I'm talking about, there will be a net addition of about 50-60 crores of debt this year.
Okay. And we have taken a blanket approval of 250 crores. So any little guidance on kind of equity we might raise, because earlier we had guided we would be keeping a certain ratio for debt equity. I guess it was 1:1.
Yeah, correct.
Right. And okay, on the second approach that we are moving towards an ODM model in the AC segment, if you can throw any light on the average realizations, because since we are moving to an ODM model, they might have increased from what they were previously.
Realizations have remained stagnant. I think we have spoken earlier also on this that we hope that we probably will be able to get a little more, because of the fact that we have become an ODM. But I think for now, and the volatility that's there in the market, the realizations are pretty much similar. The average realization at a CBU still stays about 20 odd thousand.
20 or 1,000 for the unit,
The
right?
average realization. Now, of course, there will be the lower and the upper end to it, depending on the model, etc.
Tonnage. Yeah. Okay, understood. And just wanted to check again, the 150 crore that we'll be raising in the subsidiary for compressor, that is enough for the 6 million unit capacity for the year end?
Yes.
Yeah, all right. That's from my side. Thank you so much.
Thank you.
Thank you. We'll take the next question from Garvit. Garvit, you can go ahead.
Am I audible?
Yes, you are.
Good morning, sir. Sir, first question is on the demand environment side. Currently, what kind of environment are we seeing, particularly on the RAC refrigeration and EMS side of it? How the primary and the secondary market are working for us?
In the AC segment, I think we are seeing enough and good demand. Also because of the fact that we have become an ODM, I think that's one more factor. The second factor is that the kind of base that we have is also pretty small. So for us, the runway is quite long. And yes, of course, the demand is also there. Numbers for March, I'm sure you all know it. April, May, June also looks to be on course to be an excellent quarter as far as RAC is concerned.
And on refrigeration and EMS side of it, sir?
I think we have enough demand in both the segments. That's one of the reasons why we are expanding. I think that's an indicator that we have good demand.
That's good. And you mentioned about the 30-35% growth and EBITDA margin, maybe in the range of 9 to 10%. But what kind of PAT margin range are we anticipating? Because I think depreciation will also kick in this year.
Depreciation will kick in, of course. I think PAT also should start improving going forward. So whatever adjustments we have moved from the IGAP to Ind AS this year, so a lot of adjustments have taken a toll on the PAT margins this year. But I think going forward, PAT margin should improve. Can't, I mean, predict as of now, but I think a 50 to 100 basis points improvement is expected over the next 2 years.
Okay. And on the compressor side of it, with this extension on the restrictions of the import, means is it going to slightly negative for us in the near term, or how do you look at it?
It's a very positive signal for us. Positive because the restrictions have not been completely lifted, but the allowance that has been given is only up to 40% of the imports that any manufacturer would have done in the base year, which is 24-25, which eventually means that almost 50-60% of their requirement they have to currently buy from us. If there was a 100% restriction applied now, there would have been chaos in the market because apart from us, there's nobody else as of now. This is our understanding. Nobody else as of now who's doing this compressors in the OEM ODM segment. So obviously this has to go in a calibrated fashion. It will go step by step. And I think whatever best was there has come out for us.
I think just to add, government has also taken a very conscious call. They've calibrated and understood what capacities exist in India. I mean, capacities not just of OEM ODMs, but also of companies manufacturing and their own compressors and refrigerators. So that capacity also they've taken into account. They've also taken into account the capacity that are planned to come in this year. So I think the decision from the government is also very wise, and we support it because model validation, customer validation of the model, and all of that also is a long process. So we hope that things can settle in, and since the demand gap is quite big, we hope our capacities will be able to book at a decent level, even if there is, even with the planned addition of one or two competitors that will come in over the next year or so. Thank you.
Thank you. We'll take the next question from Hitendra. Hitendra, you can go ahead.
Yeah. Hi, so I hope I'm audible. First of all, congrats on the good Q4. Just to continue on the QCO discussion, so if you can elaborate, what are the capacities that are coming? And you mentioned that this is a positive for us, but did it, change any of our timeline? I mean, in terms of adding to our current capacity, because I think the previous guidance was we were going to, take our capacity to 7.5 million compressors by this year end. I think now it is 6 million. So if you can, just elaborate on that. Agree with your point that a blanket or full kind of restriction would have created chaos in the market, but does it provide time for our competitors to also build capacities? So if you can give us some color on the landscape, who else is bringing capacities, and how we are positioned, that would be helpful. Thank you.
So a couple of
So
things.
point number one, yeah, would you like to take this?
Yeah. So a couple of things. One, of course, we are aware of two competitors who plan to come in. Timelines and details, I think best they share. But I think we are expecting local manufacturing to start maybe by end of Q3 or Q4, or early Q4 for one, and maybe mid next year for another one. I think the total capacities that are expected, I mean, the total gap in the market is about 14 million, 15 million as of today. And the total capacities, all capacities put together, I think are expected to be between 15 and 18 million as of now. Of course, these numbers are subjective and are subject to change also depending on how everybody behaves. But it also depends on what market share, what is the pricing of each manufacturer, and what is the quality of product and service as we go forward. So we believe there will be two or three players in this segment active in a year or two, which also makes for healthy competition. But we still believe that 6 million is a number that we'll be able to fill. If there is opportunity, we will look at growing further to 7.5 or maybe 9.5. 6 was more to optimize the line productivity. Initially, we had planned for 7. The 7 to 6.5 is not because of the government order. It is more to optimize the line so that the operational costs are minimum. If we continue to see demand and we are able to sign long-term contracts, then we will further look at increasing to maybe a 9 or a 10 million number. So I think we will wait for things to pan out. But this year, first we go to 6 million and we see how customers feel. And if they are happy with the product and we are able to get good projections, then we will look at further capacity expansion in the next financial year.
Yeah,
Thank
and
you.
just one more point here. So the 7.5 million that we spoke about was also in two phases. It was never going to be in one phase and in 1 year. I think we have already stated earlier that we wanted to do it in two phases, from the current 2.8 to a 5 and then to a 7.5 million. So the first phase
Right.
is still there. It's on as per plan. I mean, there's no change in plan as.
Right. No, you have told it would be contingent on the QCO and how things pan out.
Yeah.
Just wanted to check. We are currently selling like 50% of the current capacity, so we'll be adding some more capacity in next few quarters. So already have clients in pipeline. I mean, to sell these compressors, or we are going to add clients and all. Like how does it
Yeah,
going?
we have enough interest. We have enough interest. I think we are confident we will be able to do that.
Thank you. We'll take the next question from Shrey Patel. Shrey, you can go ahead.
Hello, sir. Am I audible?
Yes, you are.
My question will be on the raw material side. How much of these raw material price variations are you able to pass through to our customers? And what is the typical time lag for these adjustments?
How much? Yeah, please go.
Quantify. Actually, last 6-8 months have been, as not 6, but effectively 5-6 months have been quite volatile. And
Yeah.
So pass on depends on multiple factors. Like I explained earlier, it depends on how much the market is absorbing, how much the customer is absorbing, how much inventory do we have in the pipeline. So it is a factor of multiple things. But like I said, customers have supported, and between 10 and 15% as a ballpark figure has been passed on overall from manufacturers to brands, and from brands to the end consumer. Also, see, the pricing increase is not specific to us or anybody else. It is a phenomena that everybody appreciates in the market. So we also appreciate the fact that customers are acknowledging it and they're trying to figure out ways to sort of help us as manufacturers as well. So there is no direct number, and it varies from customer to customer, product to product. So there is a variation. But general thumb rule, like I mentioned, is about 10 to 15% pass through that has happened overall across the industry so far.
Okay. And my another question is on the compressor vertical. So we are making reciprocating compressors for refrigerators, right?
Correct.
So are we having any future plans on manufacturing rotary compressors? That's for AC, I think.
Not yet.
Okay.
Not finalized anything yet. No.
Okay, thank you.
Thank you. Before we take our next question, I request all participants to limit their question to one. We'll take a follow-up question from Raghav. Raghav, you can go ahead.
Yeah, hi. Thanks for the opportunity again. Sir, as of now, our non-AC segments accounted for 40% in FY26. What is the path that we are looking for in FY27 and by FY28? Like, do we see 50-50 or more than that?
AC should remain at around 50%.
Sorry, sir?
I think AC should remain around 50%.
So again, this number is not something that we are hardlining. We want AC to be 50-60% as a good diversification. But depending on seasonality of product, depending on overall mix, there might be changes. It is just a guidance that we have set for ourselves, considering the fact that as a company, we need to have a healthy mix. But in general, ballpark figure that we expect is 50 to 60%, yes.
Okay, so that helps. Thank you so much, sir, and all the best.
Thank you.
Thank you. We'll take another follow-up question from Shreyansh. Shreyansh, you can go ahead.
Hi, thank you for the follow-up. On PLI, sir, this year would be the last year for PLI, right? So are there any talks with government to renew the existing scheme, or the next scheme would be only for players that are backward integrated? Could you please throw some light on that?
There is no concrete roadmap as of now that we know of. But I understand the government is working on some options to help support the industry, but there's no concrete discussion that I can share with you today.
Thank you. We'll take another follow-up question from Bala. Bala, you can go ahead.
Yeah, thanks for the follow-up. So last time I asked the question about the average realization of the compressor. Could you please share that one? And also, when it comes to your revenue potential of 2,500 crores from the CapEx after CapEx, all CapEx completion. So do you think that the FY28 we can do that number given the AC demand is good, similar to FY25?
Average realization for compressor is about 1,500 rupees. That's your one question. I think a jump from 800 to 2,500 in 2 years is a big ask. I think it probably will come, but it will take a little more time.
Thank you. We'll take next question from Akshay. Akshay, you can go ahead. We'll take the next question from. Yeah, I think is unable.
Hello?
Yeah.
Yeah, good morning. I am audible?
Yes, you are.
Yeah, what will be the max debt in financial year 27?
Sorry, I didn't get your question, please. Can you come on?
What will be the max debt in financial year 27?
Net debt, you are saying, or total debt?
Total debt.
Akshay, you're speaking too close to the mic. If you can just speak a bit clearly, your question is not.
Yeah. What will be the total debt in the financial year 27?
So I'm saying another 50-60 crores is expected to be added this year.
Okay, and what will be
Net
the cost of borrowing?
Cost of borrowing remains at around 8%, 8 to 8.25%.
Thank you. We'll take a follow-up question from Garvit. Garvit, you can go ahead.
Thanks for the follow-up. Sir, 1 year back, we were targeting somewhere around 1,200 kind of top line in FY27. But looking at the current guidance, we will be like marginally crossing 1,000 CR for FY27. Despite you are saying there are good environment, demand is good in across the categories. Why there is a dip in our revenue guidance for FY27?
FY27, I think we have said that we are going to have a 35-40% CAGR. On an 825 crore base, 35-40% is closer to the number that you're saying.
Thank you. We'll take another follow-up question from Kunal. Kunal, you can go ahead.
We're not revising the guidance. We are just saying that we are expecting a good number. Exact numbers we'll probably share with you over the course of the year. The guidance remains same.
Audible?
Yes, Kunal, you are
Hello?
audible.
Okay. In this year, how much volume contribution are you expecting from the Chennai facility? And just a clarification to the 60 to 65% CU of AC you mentioned, is that what's the base for that?
Sorry, I didn't understand the second part of your
So he is
question.
saying 60 to 65% utilization, capacity utilization. What is the base for saying that? Seasonality, of course.
No, I mean, is that 1 million or 1.3 million? On what base?
Base, you're saying. Acha, base in that sense.
Yes.
See, again, here where we have to understand that these capacities are not static numbers. These are growing quarter on quarter. So we have to look at it from that perspective.
And also there is a product mix of what products customers are taking. So in some cases, we have IDUs, or some cases we have ODUs, some cases we have CBUs. So it depends on multiple, but 60 to 65%, our target is on the increased capacity of 1.3, but conservatively, at least on the current capacity, we hope to be at 60-65, because the new capacity will come blended across the year. So you can consider 65% or 60% on the current capacity of 1 million. The second part of Chennai, this being the first year, we are not expecting a massive number to come from Chennai. Maybe a 5-6% contribution if we are able to generate out of Chennai. I think that will be an overall win for the plant.
We'll take another follow-up question from Omkar. Omkar, you can go ahead.
Thank you for the opportunity. I have one question. You have provided 9-month FY26 product-wise revenue. Could you please provide product-wise revenue for FY26?
Product-wise revenue for?
FY26, full year.
No, I didn't get your question again. Can you please come again?
I think we have in PPT, we have given 9-month FY26 product-wise revenue. We have not given FY26 full year product-wise revenue.
Okay, all right.
Yeah, I think we did full year mix.
I think the general mix has been given, not product-wise. I think we have generally said that, yeah, 60%.
There is a correction in the presentation. It's not revenue share 9 month, it is revenue share 12 month. We will get that rectified. Thank you for pointing that out.
Thank you. We'll take the last question from Aryan. Aryan, you can go ahead.
Hi, thanks for the opportunity. My question is if you can provide the capacity utilization for each of the segment. And second question is the PLI. What is the PLI we have received this year and the expected PLI in the next year? Thank you.
Capacity utilizations for each of the segment have been different. I think EMS, we have been running at full capacity, almost 70 to 80% capacity through the year. AC, again, as we have been, as I said, progressively increasing the capacity over the last 2-3 years. So it's very difficult to have a number which matches the number at the end of the year. But in general, I think during the peak season, we have been working at almost full capacity, 90-95% kind of a capacity over the last 2-3 months. Refrigeration, we are at about 60-odd% capacity utilization, and compressor also at about 60-odd% utilization. I'm sorry, I forgot your second question. Hello.
I think he is not there. So since there are no further questions, would you like to give any final closing comments?
Sukriji?
Right. See, the last year was full of uncertainties and challenges. Hopefully, this year will be more stable considering the geopolitical situations. But I firstly thank, of course, all investors and stakeholders, also customers and the team for facing the challenges head on. And I think we have come out stronger. So we believe we can build on this and take the company to newer heights as we go forward. Thank you once again for all your time and on a Monday morning, and see you again in the next call. Right? Thank you so much.
Thank you. This brings us to the end of this today's call. Thank you to all the participants and management. You may end this call.
Thank you.